On behalf of KCB Board of Directors, I welcome you all to today's briefing session when we shall share with you details of our financial performance for the past 6 months. KCB Kenya, there are 170 branches. There are either 864 ATMs, and we have about 3,700 staff. In Tanzania, there are 11 branches, there are 12 ATMs, and we have 252 staff. He has 14 branches, is that right? Yes, 14. Thank you very much. And you have 16 ATMs, and you have 303 staff. All these are East African staff, isn't it?
Yes, they're all East African.
Thank you very much. May I request that as you wait, let us have Gloria, the MD for Ayagi subsidiary, whose results are not here, because as I've said, and Martin, the CEO, our CEO, would you please do the necessary?
Ladies and gentlemen.
And I, the chairman of the group of KCB, I now want to announce that the results for the trading for the first 6 months is 8.5 billion Kenya shillings. Makofi.
The results have been unveiled by the chairman. Profit is up 48% to 8.5 billion from 5.7 billion in the same period in 2011. We are very excited about these results. We performed well over the last 6 months. A number of developments in the economy. The first part saw very high inflation in the economy. It saw some instability in the FX rates. We saw increase in interest rates led by the CBR, and then all the other interest rates went up. We've also seen a slowdown in GDP growth in the country. But what has happened over the last month or so is that we've now seen the reverse begin to happen, with decline in inflation rates to the low 10s. We've seen recently a return of stability in the foreign currency rates. And we've also seen in the last 1 month the CBR coming down. And as a result of that, we've seen that commercial banks have started lowering their interest rates. In fact, it's instructive to say that KCB was probably the first bank to lower interest rates, because we did this, brought down our base rate from 24% to 22% effective 1st of June this year. The CBR followed about 2 months later, and so we believe that we read the signs well, because we would like to remain very competitive as a way of growing our business. If you look at similar factors across the region, we've seen inflation generally increasing across the region. We've also seen a mix in performance of growth in GDP, a decline in some countries, and a growth in other countries where we operate. FX rates generally have stabilized across the region. Interest rates is a mix. In some countries, we see interest rates still going up, whereas others have now stabilized. And all these impact the business that we do in the respective countries. On the products side, we have recently rolled out a very exciting new product, the KCB Mobi, which enables one to do several things. in addition to the ability to make payments and make transfers of funds. It's not limited to any network, and it's not limited to what you can do with other banks. I also want to mention that on the question of interest rates, which I've referred to, our base rate is down to 22% from June. Our mortgage rate is down to 19% from 24% effective June. But on the mortgage side, we do have our advantage premium rate, which is at 17.5%. And therefore, this is basically to say that we remain very competitive as far as interest rates are concerned, acknowledging that they're still high, but also acknowledging that they're beginning to come down. And as the macroeconomic situation stabilizes more, that we as KCB will work to drive the interest rates down further. Quite exciting for us as a bank, and I'd like now to invite Joshua, our Chief Financial Officer, to take us through some of the details of the financial performance.
If you look at the group results, KCB is a strong story for a number of years now. If you look at last year's performance, in terms of delivering on its commitments, has been something that the group has remained to stand the test of time. Total interest income is up 14.3 billion, which is 36% growth. Largely strong momentum in the second half of last year. Overall, total interest income or operating income up by 21 billion, which is 21.9%. So part of that is strong growth in assets, and you can see that our balance sheet is up, total assets by 29%, total loans are up 15%, and then you'll see that in the next slide. Total expenses are up 16%, slightly below inflation, but you'll be interested to see around our cost-to-income ratio, which I'll show you in the next slide, because we're deliberately pushing that to become a benchmark, and our target this year is around about 50, 51, 52%. Bad debts, looking at the environment, the high interest rates, we take a more cautious view to increase a little bit our provisions in line with our guidelines, but again, push hard on our recoveries. So you'll see our recoveries from bad debts around about 732 million compared to the last year of 469 billion. So overall, in terms of P&L, strong growth on top line coming through from the results which you saw last year, strong asset growth, interest income coming in, but also a strong containment on our costs in the first half. Overall, in terms of our total assets, growing closer to 350 billion as at the end of June, 29% growth. And you can see the expansion of our total deposits, 29%, but then see also the growth of the loans by 15% in the first half of the year compared to last year. So that momentum then shows the consistency of our business to grow over time this year and again in the second half. This is despite the difficulty we've had in the first year in terms of growth of our total lending in the market. My last slide is just talking about how do we look at as a business in terms of statutory ratios, our strength in our balance sheet, our ability to grow, support growth in our different sectors. KCB is a strong partner on funding different institutions in the energy sector, around sectors in airlines. Because of our large size of balance sheet, we're able to actually to support a lot of our businesses, join ourselves with other international lenders in terms of syndication. And this is one of the strongest parts of our bank.